Welcome to Mastering Your Financial Life, hosted by Judy Heft, the founder and CEO of Judy Heft and Associates, Financial and Lifestyle Concierge. This year, she's celebrating 27 years in business. In every episode, Judy interviews professionals who help others successfully manage their financial lives. You can find this show on YouTube, LinkedIn, Apple Podcasts, Spotify, Google Podcasts, Stitcher, and more. Judy is the author of 2 books, How to Be Smart, Successful, and Organized with Your Money for a Better Today and Tomorrow, and her latest book, Mastering Your Financial Life Cycles, How to Successfully Manage Money in Every Decade of Life. You can read chapters of her books and catch prior episodes of the show at www.judithheft.com. Now, here's the host of Mastering Your Financial Life, Judy Heft.
Hello, everybody. Welcome. Welcome to episode 88 of Mastering Your Financial Life. And today I'm really excited to be here with Shari Rash. Shari's podcast, she has her own podcast too. It's called Money Chic, but she's the founder and money coach at GWA Wealth Advisory. She's a virtual financial advisor, and she likes to empower millennials and Gen X families with financial know-how that allows them to live today while they're planning for tomorrow. Her mission is to make money simple for women and young families. And so I'm really excited to be here because I was a guest on Shari's podcast. Welcome, Shari. And we had so much in common that it really was a lot of fun. So I'm happy to have you back as a guest on mine. Thank you, Shari.
Thank you for having me. I'm really excited for our conversation. And yes, I found myself saying, yes, I say that same thing. I agree with most things that you were saying.
I know, it was really great because we just met each other right before the podcast. So it was cool that we had so much in common. So, we talk about, preparing young families, and, I think they don't realize maybe they haven't accumulated a lot of wealth at this point in their young lives, and they're not really sure what that means. And maybe they think they don't need an estate plan or anything else, or they don't need to plan. And I know in our company, we approach running a household like running a small business, and you have to have a spending plan. But why do you think that traditional budgeting fails us? I mean, people think, oh, and then, they say to us after we put a spending plan together, I don't want you telling me I can't go get work done or whatever it is, So it's interesting.
Well, when you look up, if you were to Google financial advice, the first thing is set a budget, right? And budget is the B word to me. I don't like it. It has a negative connotation. And I think that I feel that traditional budgeting fails us because if you were to ask someone to put together their budget, what are they going to do? They're going to list their housing expenses, utilities, water bill, cable bill, groceries, going out to eat, but it's not going to be an accurate number. And then maybe some miscellaneous stuff. That's not life. That's not real life. That is not what happens. And so budgeting fails us because one, it makes us feel like we should only spend money on necessities, and anything outside of the budget it's a very strict line item thing, right? Each expense is a line item, but it doesn't account for life, and stuff comes up, stuff happens. So most of the time we blow our budgets because we're not accounting for life. We're just planning for the necessities. And so then we feel like we're failing, like we're doing something wrong. And statistics show traditional budgeting only works for about 30% of the population. And I think that's because that 30% has a very structured mindset. So they like that structure. They like those strict parameters. But for 70% of us, it doesn't work because budgeting doesn't account for the one-offs that happen all the time.
Well, that's so true, Shari. I agree with that. But also, I think that, especially for people that are on or that feel like they need a budget, it's a good idea to have an emergency spending plan so that these one-offs, things that come up, that you should have at least 3 to 6 months, if possible, put away in cash for an emergency. And that way you can have a better way of sticking to your planned expenses, your normal everyday, basic expenses that you need. And then you have a little extra. And then another good thing that I tell people to do is, put a certain amount away every week or month from your paycheck and use that for your vacation. Have that be your fun money. You need, or this new fabulous outfit that you wanted to buy, or a piece of furniture, or something your kid wants. So I think that's another way to do it. Like figure out a percentage, put that away that you don't touch it, and then have it saved for something exciting and fun that's going to come up, even if you don't know what it is.
I totally agree. I call that my wishes. So when I'm working with my clients and creating a spending strategy, because oftentimes as a financial advisor, people are coming to me and they just want to invest. Like they're wherever they are in their lives right now. It's like, okay, well, I want to start investing monthly. And where I think some financial advisors fail the public is they go, okay, how much do you want to invest? $200 a month. Okay, great. Set you up for $200 a month. And then that's it. Where I work backwards and go, well, where are we going to get this money from? What is where is it coming from? And how are we going to build it into your spending strategy? Because we can't just make $200 appear if you're essentially spending close to everything you're earning. So money in, money out equals money in. How are we going to make $200 a month appear that you want to start investing? So we have to start at the very basics of, like you said, having the emergency fund. I can't do anything with my clients in good conscience until I have an emergency fund for them. But then next, creating a spending strategy. We have to spend money every day to live, to function. So let's have a strategy around it versus just willy-nilly spending here or there, and understanding where the money goes. And in the spending strategy, the goal is for 20% of your take-home income to go to wishes. And wishes are exactly, Judy, what you mentioned: vacations, house renos, building up a savings, right? Building up an emergency fund, or building up an investment account, whatever you want it to be. So growing your net worth is part of the wishes as well. So it's part of the overall strategy. And then it helps the client to feel empowered of, I'm still living my life. I'm still doing what I want, I'm doing what I want to do. But I'm also planning for the future, because so often, you mentioned vacations, we go on vacation and we're just paying for it, right? We don't necessarily have that money set aside. And it feels a lot better to be able to just pay off that credit card bill, as soon as that bill comes, with the money you've saved, versus paying it off for potentially months and months.
Yes, because then it's costing you 10 times as much because of all that interest you're accumulating on your credit card. I think a lot of people don't realize that. You see this wonderful item on sale, and like, ooh, I have to get that. And then, but I don't really have the money, so I'll just charge it. And then the next thing you know, it's cost you 3 or 4 or 5 times as much as originally planned. And you didn't get a bargain after all. It's more than the regular price of the item. So I think, yeah, that's really something to be cognizant of. And I think today also, Shari, that we do so much swiping of our credit cards or buying things online that we don't pay attention. We really don't know what we're spending. I'm going to just buy that. I can just get it on Amazon. It'll be here tomorrow. It's silly. So we need to be more cognizant of what's going on. I think that's really important. And I think some people are just so blasé about it. I think I mentioned this to you last time. My sister was a little girl and she wanted something, and my parents must have told her we didn't have the money. And she said, well, just write a check. This was pre-credit card days. Just write a check for it, it doesn't matter. So, I think that sometimes adults have that mentality too. I'll just charge it. What's the big deal? I'll pay for it when I can. So it's not healthy.
Back talking about the credit cards, I don't know if it's like where you live, if it's happening, but where I live, businesses are starting to impose a charge on you if you were to use your credit card. And so it's like you're paying, and there doesn't seem to be a rhyme or reason that the businesses, it might be 1%, it might be a couple bucks, whatever it is. But they're adding that to your bill if you use a credit card. So I'm working with clients and I'm like, well, I'm going to use this because I get the points or I get the miles. And I'm like, yeah, but are you using the card at places that charge you to use your card? Because if you are, those points aren't free, those miles aren't free. And then if you're also leaving a balance on your card, not only did you pay extra money to have it use your card, but now you're paying an interest rate on top of it. So it's like all that free stuff isn't free.
It's so true. And it sounds like common sense to us, but it's not to everybody. It really is. Yeah. It just makes perfect sense. So yeah, I'm seeing that in restaurants here in the city. I'm in New York City, and I'm seeing restaurants are starting to charge 3% if you use your credit card, instead of cash.
It's significant. It definitely can add up. Yeah.
Yes, absolutely. So we talked a little bit about money personalities too when we talked. Let's enlighten our listeners about money personalities. There's so many different types, and I don't think a lot of people understand them. So how do you work with your clients with personalities?
Yes. So everyone has a money personality, just like we have a regular personality, right? We have things that make us tick, make us happy, or how we react in situations. Money's no different. So, and understanding that about yourself is super important, because that's really what shapes what you think about money, how you feel about money, your money decisions, the way you react with your partner about money. It affects everything. So really understanding your money personality is super important. And there's a handful of them. What's interesting about, most things in today's day and age, but with finance, you can Google all of this stuff, right? A lot of this isn't necessarily rocket science. We can research it, but I think where the value that you and I, Judy, provide is that we can take all this Googleable stuff and put it into plain English for the end user to understand and make it relevant to them. And that's what I do when I'm helping my clients identify their money personalities. And I don't straight up ask them, what's your money personality? Because they don't know, right? But through, I can identify it pretty quickly just through some of my initial conversations, what they tend to focus on when they're when I just say, tell me everything, sit down, let's talk, tell me everything. What they tend to tell me first helps me to guide me into what is their personality. So generally speaking, your personalities are, you're a saver, you're a spender, you're a miser, so you feel bad about spending money. You kind of live by you take another personality, you take spending to the next level of, you don't even think about it. It feels like a never ending well to you. And then also you, but there's a continuum though. You're not all or nothing when it comes to your money personalities. You can be a little bit of both. Like one personality is a saver spender. I'm a saver spender. I'm really good at saving, but I'm really good at spending. I can do both. So it's identifying how money makes you feel. And oftentimes we can identify our money personality from our first money memories. So, and it may not necessarily be your first, but it's what's most powerful to you. Or if I were to say, what is your first money memory? The story that happened that you think of right away. So obviously the story with your sister, well, let's just write a check. I'm curious if she remembers that event, but that obviously made an impact on you, right? So it wasn't even necessarily involving you. You just witnessed it. And I bet you that helped to shape who you are today.
Absolutely. I love what you said about, your first money memories, because it's so true. Because if you were living in a family that was constantly scraping together to make ends meet, then maybe you're going to have fear around that, or maybe you're going to copy that, or maybe you're going to be the opposite of that. Our minds work differently, and sometimes we just follow that same pattern, but sometimes we're there and we want to break that pattern. And so I think it's really important to understand this about ourselves. Of course, we don't know what our money personalities are. Like if you said to someone, what's your money personality? They don't know what you're talking about, but it's interesting that you ask the right questions so you can help people figure that out. And then, help them to take the action around it. First, they have to accept it and want to make change, and then take that action. And that's so important. It's great that you're helping people do that. I think.
Thank you. And it helps me to make recommendations. So if I'm speaking to someone that leans more towards a saver, and I've also kind of coined the term money hoarder, because there are people that just want to have as much money as possible, and it's not in a greedy, it's because they feel insecure or the way they grew up. So, you know, just like every personality in life, every money personality, there is an extreme, and we have to be very careful about that. But if I'm sitting with someone and they're a saver, I need to understand what amount of money they feel comfortable with having saved before we can do anything else. I could say to them, well, you know, based on your situation, you only need 3 months of living expenses in an emergency fund because of XYZ. And then, but they may be hung up on that and say, no, like that makes my stomach hurt. So I know I can't even make that recommendation to them. It's okay. Does 6 months sound good to you? What works for you? So it's really important as an advisor to understand that about them, because that's their foundation. That's their core behavior that I can't change. I can coach them through it. I can help them recognize it, hold the mirror up, but I can't change it. So I need to make recommendations that fit and make them comfortable, because if they're not comfortable, they're never going to follow through with the bigger stuff.
That's so true. I once had a client, a very high net worth, wealthy individual, and he was in his mid to late 80s, and he was so afraid to give any of his money away. He had plenty. He was going to outlive it. He did end up outliving it, but every time he would start, you know, because he would do this annual gifts to his family, to his children and grandchildren, and he would do those the last possible minute in December. And then by January, he was a nervous wreck already for the next year, and he was already stressing over it. And it was the same for giving to charitable organizations. He panicked about it. He couldn't give the money away. It was really interesting. And he had plenty of it to give, believe me. So, you know, everybody's wired differently, you know. And then there's another client who has no money, and they have to be a member of this particular country club that they want to be involved in, and they don't have the money for it. They can't afford it. So, you know, everybody's different. They have their own comfort level, or other people, you know, are just like taking care of their children before they take care of themselves, because they feel like that's more important. So it's really important to know what your money style is. There's so many different ways of looking at that. And like you said, nobody knows what their money style is, you know, until we start digging deep, and hopefully we can get them to come to our way of thinking and, you know, make a few changes in life. But change is hard, as we know. It's really never easy. So, yeah. Absolutely. So, yeah, let's take a little break right now, and then we're going to come back and talk some more with Shari Rash. Shari's podcast is Money Chic.
Hey there. I just want to tell you a little bit about my new book that just came out called Mastering Your Financial Life Cycles. And here it is. It's how to successfully manage your money in every decade of life. I co-authored this with my CFO, Liz Levy. And together we created this manual that's going to help you through every stage of life. We talk about having a baby. We talk about young adulthood, pre-retirement, what to do when you're at that age of retirement. If you're contemplating divorce, do you need an estate plan? We cover all of these, each subject in a different chapter. And I really think that you're going to find this so helpful, because at the end of every chapter, we have checklists that you can look at and you can use, and they can be a guide for you. So this is a wonderful manual that we've created. It's available on Amazon. You can also find it on our website at judithheft.com/book. And we're here for you. If you need anything, reach out. I hope you enjoy the book. Here's another picture of it, just so you know what's going on. Here it is. And I'm really proud of it. It's my second book, and I'd love to have you read it and give me your feedback. Judy Heft, judithheft.com, financial and lifestyle concierge, celebrating 26 years in business. And over the years, I've learned so much. And what I've been trying to do is impart a little bit of this knowledge to you, so I can help all of you become as financially organized as I am.
And now we're back. We're back with Mastering Your Financial Life. And today we're here with Shari Rash. Money Chic is her podcast, and she's a money coach and an investment advisor. So I'm really happy to be here with you. So, Shari, I think my kids are a little older than yours now, but, so what should we not say to our kids about money? I'm just going to preface it by saying when my kids were in their early 20s and fresh out of college, I tried to convince them to open an IRA or some kind of an investment strategy because and I know that when we look at all those statistics, the younger and earlier you start, the more chance you have of being a millionaire, multimillionaire, whatever the case may be. And, of course, they ignored me because what do I know? I'm just a money person. Hopefully a few years later now, they don't think I'm as dumb as I was when they were 20. I'm just kidding, but you know what I mean? So, what are some of the things we should not say to our kids about money?
And I think, there are quite a few things that we should say or rework when we're talking to our kids about money. One, not talking to them about money is a mistake, right? Because if you don't, they see you using it. They see these plastic things that we swipe. They may even walk in sometimes on a little bit of an argument, or they know there's something going on. They know this money is important. But if you don't talk to them about it, how can we ever expect them to be adults and function and make good decisions in the future, right? So it's just part of the education. So some things to be cautious of, and this also comes back to your money personality, understanding the way you speak about money and think about money, but some, saying, well, we can't afford that. In a child's mind, like they have no concept of affording things. Is something a good price? They don't know. So by saying we can't afford that kind of takes their little brains into a tailspin of, well, what else? If we can't afford this Barbie doll, what else can't we afford? Can't we afford our house? So we can't afford that is tough. But by reframing it of, well, I see that if I'm in Target and my 4-year-old wants a Barbie doll, instead of saying we can't afford that, I understand that you really like this. You have your money in your piggy bank. Do you want to use your money for that? Would you like to buy it? And then you could say, well, like this is $20, and I know you have at least $20 in your piggy bank. And what that does is that empowers them. That gives them the decision to say, yes, I do want to use my piggy bank money, or no, I don't. It's not worth it to me.
I think there's a lot of no, I don't. So when mom's not paying for it.
Exactly. So our money is unending. Yeah. So that's one option. Or instead of saying we can't afford that, in your head you might be thinking that's so expensive. That's a ridiculous price for that. But instead it comes out we can't afford that. So just say, I think that price is a little bit high for this. So I'll tell a story. I was taking we're in summer camp season. I just did all the summer camp drop-offs this morning. I'm going to do the pickups this afternoon. And I was taking my 4-year-olds to gymnastics camp. And Annabelle, my 4-year-old who loves gymnastics and loves the outfits and loves all of that stuff, saw this. It was a super cute outfit hanging up in the gymnastics studio. And she's like, can you buy me that? And I'm like, I never say yes to anything. And I'm like, well, we'll see. And I asked the person behind the check-in, I'm like, can I see, how much is that outfit? And it was $125. I just fell on the floor. And I'm like, absolutely not. But instead of saying like, we can't afford that, or I'm not paying for that, that's ridiculous, I said, I bet you we could find something a little less expensive. Like, let's look on Amazon for it. Oh, okay. We'll look on Amazon. So instead of like making a big huff about it, it's like, well, that mommy thinks that's a little pricey. Let's go find another. And she's happy. She got her outfit, and I spent $20 instead of $120.
She didn't care.
Right. So that's another example. Also, talking about rich people, or the wealthy, or they must be rich. And I hear kids saying it. They don't know what that means. They don't know what rich means. They don't know. So being cautious about that, especially if rich people are bad, or how did they get their money? So being cautious about the way you speak about other people and what they may have or not have is important as well, because that, again, that just shapes kids are born with their money personality. They're born with it just like a regular personality. But by shifting a little bit of our communication with them about money can help to kind of give some parameters around it, and not let, my oldest child is a saver. She saves every dollar she has. She is very choosy with the way that she spends money. My second daughter is a spender, and if she has $5, she's figuring out how to spend $6. Her money burns a hole in her pocket. So I have to speak to them a little bit differently about money and kind of rein it in for my 10-year-old and say, okay, you don't need all of this. Like you don't need a new shirt because you have 3 in your closet still with their tags on it. Let's use that. Or my older daughter, I almost have to give her permission to spend money. Hey, you worked really hard. You got up at 7 a.m. and you let our neighbors' dogs out and you take them for walks and you work hard for your money. You can reward yourself, because I know she's not spending all of it. I know, so I give her permission to spend a little bit to reward herself for her hard work. My 10-year-old, no, I need to teach her how to save.
That's really interesting to me, because they're both from the same parents, I'm assuming. I don't know that, but anyway, I think they are. And, and we think that so I've had this tendency to feel like we learn our money habits as young children from our role models. But here you're the role model, and you have two different children with different personalities. And my daughters have totally different personalities too. So I get that, but you don't think about what you're projecting or what you're doing yourself, how it's affecting them so differently, because they do have different personalities. That's fascinating, I think.
Yes.
So
it is. It's fun. It's fun. I tell this story often about my 10-year-old when she was much younger, and I would let them, the kids love paying for their own stuff. Like if you have a young child or a grandchild, and if they have their money in their piggy bank, hey, let's go and let's get you a treat. The sense of pride that they feel when, especially handing the money to the cashier, it's really awesome to see. And I don't think we realize it as adults. Like, we're kind of like, all right, let's just go through the motions, get your thing, whatever, pay for it. No, like, make it an event. Like, you are going to spend your money and you're going to pay the cashier and you're going to get change back. Well, my 10-year-old thought that she was making money when the cashier gave her money back. She goes, not only did I get my toy, they gave me money back and I got a receipt. This is great. And I'm like, oh.
That's cute, though. It's cute, but you got to train her in the right direction. Yeah. It's so funny. I have my granddaughter is 11, and she graduated from 5th grade, and her birthday was also around the same week. So she got lots of money as gifts. So when I saw her and I'm always, trying to get her not to spend it all. And I'm going to take some of your tips on that too. But when I saw her, I was visiting at camp, and I saw her, and she said, oh, Nana, I'm so excited. You're going to be so proud of me. I took most of my money that I got from my gifts and put it in my savings account in the bank. And I was so proud of her. And she just really wanted to brag about that to me, because she knows how important I think it is to be saving, because she's like your 10-year-old. Money burns a hole in her pocket, and she just wants to spend it immediately. So she did tell me that she put that money there because she's saving up for something big. But that's okay. That's the way to do it. So it's interesting how everybody's different. And we need to understand when we're talking to people.
Allowing them to make decisions is so important, and saying, okay, you got this money, you have this money now. What do you want to do with it? One, let's put, like, almost make it like we're going to put some in the bank, right? So it's understood. We are putting some in the bank. How much would you like to put in the bank? And, do you want to put half in the bank? And in the bank doesn't mean it's gone forever. It's just for the future you're going to use it for the future you. And then how much do you want to save? Do you want to, give some to the animal orphanage, or do you want to have a lemonade stand and donate the money from that? So letting them make decisions, because the beauty of it is they really can't screw anything up, right? They can spend all of their money, and okay, fine, they spent it, but they're little and they'll get more or what have you. by having that exercise now, it then helps them for when they're an adult to understand that when money comes in, I need to have a plan for it.
That's so true. Yeah. And they're not going to worry about having groceries or putting food on the table or paying their rent at their ages. So they have different parameters. So, like, why do you think adulting is, quote unquote, adulting is failing us financially?
So I'll talk about my generation. I'm an elder millennial, and we generally did what we were supposed to do. We went to college, we got a job, and now we're adults. Although millennials are generally buying houses later than our parents and previous generations, but we are living on our own. But we're expected, we did exactly what we were supposed to do. We followed the rules, but no one taught us what to do with our money or how to do it. So we got set up with, okay, these are the things you need to do to become an adult. Now be an adult. And it's like, wait, how, hence why we created the term adulting. I don't know what I'm supposed to do now. So adulting.
I don't want to be an adult.
Right. Like, can I go back in time, please? This is way overrated.
Let's have a little rewind here.
Yeah. So we're now told we have to adult, but no one's taught us how to adult. So we're just on our own trying to figure it out, because our parents, they had a different money experience. They bought a house, in their very young adulthood. They might be in that same house still, right? So they are paying off the mortgage. They worked and they got their pensions, or they've been with one company. We're switching companies, we're switching jobs. And no one's teaching us this stuff. So we're doing the adulting part right, but the financial aspect of it is a big question mark, and we're not sure what we're supposed to do.
That's so true. And it is hard, and it can be overwhelming to try to figure it all out when we're getting information overload. Everybody's telling us one way to do it or another way to do it. And so we really need to speak with our trusted advisors like yourself and myself, so that we can help guide these people. And then, of course, they have to make their own decisions anyway, but it's good to have the right people guiding you. So this was great. This was really great conversation, Shari. Thank you so much for being such a valuable guest. So how can our listeners find you?
As you mentioned, you can check out my podcast, which is called Money Chic. And Chic stands for confident, healthy, informed, and capable when it comes to your money. And that's what I help my listeners do. So it's just conversations just like this. As Judy mentioned, Judy was on my podcast a few weeks ago, which was a great conversation. So it's really just conversations about money. The stuff that, we can look this stuff up, we can look financial stuff up, but sometimes it takes someone to speak our own language so we can understand it better. So that's really what I do with my podcast. Or if you want to check out my firm, you can visit my website, GWAwealth.com, GWAwealth.com.
That's great. And I'm sure they can find you on LinkedIn too.
I'm on LinkedIn. I have a book coming out towards the end of the year, which will also be called Money Chic. My socials are all Money Chic. So just if you Google Money Chic, you're going to find me.
That's great. Well, thank you, Shari. Thanks for being a really interesting guest today. It's always nice talking to you.
Thank you.
Thank you for tuning into Mastering Your Financial Life, hosted by Judy Heft. You can read chapters of her books and catch prior episodes of the show at www.judithheft.com. Thank you for your positive comments and sharing this show with others.